In this lesson, we'll talk about something that can make or break your budget, your business, and your bottom line, and that's pricing. As a dietitian in a leadership or entrepreneurial role, you'll be making decisions that affect the financial health of your program, department, or entire business. And pricing is an important component of this. It affects how much revenue you bring in, how your services are perceived, and how satisfied your clients feel. But pricing is also quite strategic. Set prices too low and you'll undercut yourself. Too high and you might lose your audience. And pricing ties into operational efficiency. If you're mispricing services, it can lead to losses or poor resource use, and that hurts everyone. The RD exam expects you know how to calculate pricing accurately, and this lesson will show you how to do exactly that. But before we can jump into the math, let's get a clear take on what goes into the cost of a product. These are called cost of goods sold, or COGS. COGS includes everything it takes to make or serve a product. Food ingredients, packaging, even the labor to prepare it. And COGS are made up of two main categories of variables. First, we have variable costs. These change directly with how much you make or sell. More meals means more food, more napkins, and more labor. But we also have semi-variable costs. These can shift with production, but not as directly. Think of your line cook's hourly wage. If you're open longer, it will cost more, but it doesn't change with every single meal. Though this can get muddled, it can get complicated because some labor is considered variable cost and some labor is even considered a fixed cost. A fixed cost are your steady bills, your rent, your insurance, and your salaried staff. These are not part of COGS, cost of goods sold, but they're essential to financial planning. So V is for variable, think volume-based. S is for semi-variable, and F is for fixed. That's your foundation. So now we can dive into the pricing math. To find a selling price, we need to calculate something called the markup factor. It's also sometimes called the price factor. To do this, we need to make sure that we build in enough room to cover overhead, profit, and any unexpected expenses. And the markup factor does just this. Think of your markup factor like your multiplier. It's what you use to boost the raw cost, like the food and the labor, into a final selling price that keeps your operation sustainable. The equation for markup factor is right here. You take 100% and you divide it by your cost percentages, the cost of food or the cost of labor. And because we're working with percentages and 100% represents the full value selling price, the cost percentage tells us how much of that final price will be used to cover our costs. By dividing 100 by that percentage, we'll get a number that scales up the cost to reach the full price. So let's say our food and our labor cost is 25% of the final price. That means the remaining 75% covers other expenses and profit. So if we divide 100 by 25, we'll get a markup factor of 4. That tells us we need to multiply the cost by 4 to reach our selling price. So once we know the markup factor, we use it in this equation right here. Selling price is equal to the cost of goods sold multiplied by the markup factor. And remember, we find the markup factor by taking 100 and dividing it by the cost percentage. Now, just one important side note is that if you're given more than one cost percentage, such as food cost percentage and a labor cost percentage, you don't use them separately. You add them together first to get the total percentage of the selling price that's used to cover all costs. Then you plug that total percentage into the markup factor formula. Once you get your markup factor, you'll then multiply the cost of goods sold to determine your selling price. And we'll walk through all of that in the next slides. But for now, just remember, cost percentage tells you how much of the selling price is used for the cost. And the markup factor tells you how to scale up the cost to find that selling price. Okay, are you ready? Let's try an example. In this problem, we're told that a restaurant spends $100 in food and labor cost to prepare a special meal. They want to apply a food and labor cost percentage of 25% and determine the selling price. So how do we figure out the price that they should charge? Well, remember those two equations. We'll need to calculate our markup factor in order to determine our selling price. Markup factor is that multiplier based on your cost percentage, and right here we're told that the cost percentage is 25%. So if we take 100 and divide it by 25%, we'll figure out our markup factor. This is how much we need to increase the cost to get the target price. Since selling price equals cost of goods sold multiplied by the markup factor, and our markup factor is 4, and the cost of goods sold is 100, then the selling price here should be $400 for our special meal. Remember that the markup factor is building in our margin. We're covering our costs, and we're making sure we hit the profit target. Let's try another selling price problem, but this one actually gives you the price up front. We're told a cooking program sells for $166.50 per person, and that the cost percentage is 30%. The problem is asking us to solve for the cost to the organization, or the COGS, the cost of goods sold. Now, a cost percentage is always defined relative to the selling price. It tells us what fraction of the final price is used to cover a given cost. In this problem, the phrase cost percentage is intentionally broad. It doesn't specify food or labor or any individual category. Sometimes it's just food cost. And on your RD exam, that's the one that I would most expect you to get, because in most food service settings, we start with food cost because it's the easiest and most consistent number to track. So we'll often build our prices around a food cost percentage. Sometimes it's food and labor combined. It all depends on what cost the problem is using to set the price. But in this problem, whatever cost we care about impacting our price, it's making up 30% of the final price. So to find our markup factor, we're going to take 100 and divide it by 30%, which gives us 3.33. We can then use that markup factor as well as the selling price to try to figure out the cost of goods sold. And this just becomes an algebra problem because selling price, $166.50, is equal to the cost of goods sold, which is unknown, multiplied by our 3.33. So to solve for cost of goods sold, we need to undo multiplication, or divide both sides by 3.33. And when we do that, we come out with a cost of goods sold about $50, meaning $50 is the total cost to deliver the program before any markup or profit is added to it. That is the cost to the organization. And so in this video and the next one on pricing, try to keep in mind what a cost percentage tells you. Cost percentage is how much of the price is made up by a specific cost. And that cost could just be food, or it could be a combination of food and labor. It just depends on how the problem defines it. One more little thing involved, and if you've ever found this confusing, you are not alone. I remember clearly struggling with questions like this during my own RD prep. So we're going to break it down clearly. In this problem, we have a restaurant spending $2.25 on food costs, and they have a food cost percentage of 25%. They have a labor cost of 40%. It takes 8 minutes at $18 an hour in labor to prepare the food, and we're trying to figure out the selling price here. Well, since we're trying to figure out selling price, it's still these same two equations. We need to figure out the markup factor, and we need to figure out the selling price. We have a food cost percentage of 25 and a labor cost percentage of 40. So we'll add those up to get our total cost percentage of 65%, giving us a markup factor of 1.54. We're told that the food cost percentage is 25% and labor cost percentage is 40%. Since both percentages represent a share of the total selling price, we need to add them together to find the full cost percentage. That means we're going to multiply our cost by 1.54 to get the final selling price, because 1.54 is our markup factor. Next, in this problem, we're not told the cost of goods sold. We know that they spend $2.25 on food costs, but also that they spend 8 minutes at $18 an hour. Those together make up the cost of goods sold. And so we'll need to factor that in together. We have the cost of the food plus the cost of the labor. And the labor right here requires an equivalent statement. 8 minutes at $18 an hour. How much do we need to pay a worker who makes $18 an hour if they work for 8 minutes making this food item? 8 minutes is our given. The units of minutes will go in the bottom of the equivalent statement to cancel out. And I know that there are 60 minutes in an hour. So instead of writing the equivalent statement of $18 equals 1 hour, we can write $18 equals 60 minutes. So we can figure out how much it costs to pay our workers to work for 8 minutes, and that is $2.40 on top of the food costs, which is $2.25. So the cost of goods sold is the sum of these, $4.65. But keep in mind, that's cost of goods sold. We cannot forget our markup factor of 1.54. The selling price is equal to the cost of goods sold multiplied by the markup factor. It comes to $7.16. That's the final selling price. Remember, always start by finding your markup factor. It's the key that tells you how much to increase your costs in order to reach your pricing goal.